Don't look now, but tech stocks are soaring. The Nasdaq jumping today, even as the broader market remained under pressure. But it all comes down to a matter of trust. It is the busiest week for earnings, and a number of the Nasdaq's biggest players are in the spotlight. Microsoft, Amazon, Alphabet, Intel, Visa, all on deck to report this week. No doubt investors will be hanging on every word, as many of these names have started rolling over this month. So despite the action we've seen in these stocks, can you trust in tech to get the rally back on track, Guy?
That's one of the worst Billy Joel songs.
I agree. I concur for once.
Ding. You hear the ding?
But putting that aside.
And we needed a matter of trust song.
Exactly.
So they
trust
got
songs,
lazy.
trust
They
you
did.
Google
There are other
that, that's
songs
what
we
comes
could
up.
have.
Plenty.
What can we trust in tech? I'm not necessarily sure we can trust in tech. And if you're banking that the market's going to renew this rally based on earnings over the next couple of weeks, I think you're probably swimming in the deep end of the pool. I think the one that sets up the most interesting for me is Intel. Why? Intel went from 45 basically to 58. Round tripped it. Here we are at 45 again. Valuation is interesting. They report in a couple days. I think the most important one, in my opinion, is Facebook on October 30th, and we know that story. Microsoft is the wild card. Why? Because this quarter is going to be great. Is valuation going to finally be a concern? Because at 22 times forward earnings in this environment, Microsoft giving their EPS growth might be a little bit rich.
But you think Intel will do well because it went down into earnings?
I think Intel sets up well into earnings because of the move with the precipitous drop we've seen, by the way, for the right reasons, from 58 down to 45. I think as a trade, to me, Intel sets up the best out of all of them.
Yeah, you're probably watching Facebook very carefully.
Yes, Facebook very carefully, although Alphabet is my biggest position, so watching that as well. I think Alphabet and Amazon both, I think, on Thursday. Facebook, though, I mean, there's a lot of idiosyncratic elements to Facebook, probably more even than the business in general. So I disagree that's the most important one. I mean, Intel, I think, very important. I mean, we've seen, God, the semiconductor space is awful.
You know how Guy said the producers were a little lazy with the choice of that song? I think he was a little lazy with the choice of Intel and Facebook.
Dan's coming out.
Well, I mean, seriously.
Okay,
it's MAGA. It's Microsoft, it's Apple, it's Google, and it's Amazon. Those four. Those are the only ones that matter. When you think about all the sectors that act so poorly, even the ones that have already reported, even though that we all agree that the bank stocks had good results and stuff like that, well, the XLS down on the year. It had its lowest close of 2018 today. Those four stocks I mentioned, they're going to dictate how the market trades for the next couple months, in my opinion.
Well, I mean, we have this thing, did tech soar today? We barely broke last week's range. I mean, there's no signal in this move today whatsoever. So I don't think you can look at this.
relative outperformance is to be discounted in this case?
Yeah, absolutely. I mean, just look at a chart. We didn't even break last week's range on the high or the low. At the end of the day, these things faded. I would not be looking, I mean, maybe earnings sparks the rally, but I don't think you have to get into them ahead of time. And what we've seen from every other company is warnings about the future or disappointments about guidance.
Keying off of what Dan said about XLF and the banks, they traded terribly today, right? Pretty much closed at session lows, relative underperformance despite pretty good earnings. We saw Netflix. What did they have? They had a good quarter. What happened to them? They're below their levels going into earnings. So
why can't the
isn't
same
that
thing
going to be the
happen?
playbook going into this? What makes these stocks different?
Nothing makes them necessarily different. What makes them different, in my opinion, is some of the moves we've seen to the downside and some of the names. And Intel, it's not part of MAGA because there's no I in MAGA. I can do that spelling. Dan.
Manja? No.
I think I kind of nailed the acronym.
No end.
I like Manja.
This whole
I'm going to make some hats or something.
But I did mention Microsoft. And I think Microsoft would be a concern because although I think the quarter's going to be fine, I think people are going to now be focused on valuation. Why I think Facebook is the most important is because of the huge drop that we've seen from that 204 level a few months ago to where we're currently trading. The stock basically hasn't bounced until recently off that 150 level. If it gives up the ghost on earnings on October 30th, no pun intended, then that could be the next catalyst down for the broader market, in my opinion.
But basically, all we're talking about here is a setup going in. What the valuation is going in and whether or not it's enough to hold up this valuation.
I would change my cautious view if over the next few days we had a big sell-off. Then I think these things are poised for a pop. But since we haven't done anything in a couple days, I think you have to wait.
I think it's a tradable pop. The lower they go into it, the way they can come out of it. But I think it's really important to see how a lot of other sectors that did have good news, the way that they traded. They were a source of funds. And I just listen, I can go down to a list. Look at the way small caps closed today, okay? Look at the way materials closed today. Look at the way industrials closed today. Obviously, we just mentioned the banks. I mean, you can keep on going. The only things that were green on my screen were stocks that were high valuation tech. So you have low valuation on the other side that trades horrible. You have high valuation tech that's being a little bit re-rated right now, and they may have a short-term pop, but I'm not certain without really strong forward guidance that we are going to see the sort of pickup that you would expect into the end of the year to get a strong close. And it's really important to remember, the S&P's up 3% in the year. It's down about 6% from its recent highs. The NASDAQ massively outperforms, and it outperforms because of MAGA. Amazon's still up 50% of the year. Microsoft's still up 27% of the year. Apple's still up 30% of the year. If those stocks, I'm forgetting, and Google, which is not up a lot. If those four stocks.
It's one of the A's in MAGA.
Yeah. Whatever you want. If they go down together over the next couple of weeks, the whole market's going much lower. It's just that simple.
And if they go up?
Well, if they go up, you know what? Today's a great example. The S&P closed down in the day. So I think that all this talk about rotation, we're seeing too many economically sensitive groups act very, very poorly.
I mean, financials, industrials.
Listen, Dan's been on the negative financial run, and he's been spot on. It's very hard to sit here. At a certain point, you have to say, or at least I have to say, as much as I like to believe in it, as much as they might make sense in terms of the valuations that I give, stocks trade awful. So at a certain point, you're wrong. And that point is we're basically right there in terms of specifically, by the way, Goldman Sachs and Morgan Stanley have just been abominations.
What concerns me is the narrative of the slowing economy that's going on out there. Goldman Sachs had one of their indicators out today that leads ISM. We saw that turn down. We saw Chicago Fed National Activity Index turn down over the last couple months. Those tend to lead. So what I'm concerned about is that market participants are starting to price in this slow economy, and it really doesn't matter what earnings do.